Hello traders, welcome to our daily forex forecast. We do our daily market review and then we talk about what is going to happen on next. So on this episode, I'm going to break down the key levels and the areas you need to watch for tomorrow trading. And today is Monday 15 September 2025. So before I dive into the chart, I want to say something. I observe that I am having people watch my videos, but yet no likes, no comments. Although yeah, I'm just starting, and I understand that some of you might not really have anything to say yet. But I want to say it will be very, very you know pleasant if you could just give me a like and a comment. Just whatever you can say. If you really don't have anything to say, okay, thank you for this video or something. Or if you have a question, because if you actually watch the video vividly, you pay attention to these key levels and what how I am going to analyze the market, you should have a question to ask. If you are new, if you are old, or whatever. But anyway, I just want to use this time to plead with you guys to subscribe to this channel, like and comment so that the YouTube algorithm will push my videos to more traders like you. So thank you so much and God bless you as you help me in this great journey of mine. So today we're going to look at the Monday 15th of September 2025 daily contract, how price delivered for today. And as you all know, we used to analyze the DXY, the dollar index, to correlate with EU, since this market they move in tandems. So using the analogy that we already know, that if dollar is going down, euro is going higher, and if euro is going lower, dollar is going higher. So since they move in opposite and they form SMT divergence, then we can, and also very important because of the dollar dominance. So let's look vividly into the dollar index before we go to the euro US dollar. And I have a very interesting things I want to show you guys on euro dollar, especially for tomorrow. So what we have here is we've seen that on a daily time frame narrative for the dollar, for the dollar index, we have our swing high and our swing low here. And if we measure this swing high to this swing low, we have our 50% around this area, and this area is our premium price, which is the 62 or 75% region, 70% region. And we see how CPI trades very deeply and takes out all these lower time frame sell side buy side liquidity, then delivered lower, and it still supports our overall monthly perspective that we are looking for price to come for this sell side liquidity, and more importantly this monthly external range liquidity, which is the MCRL, which is monthly candle range low. So let's focus on this particular area, since that is where we are trading. And as a trader, what you need to do is, especially preparing for every day, you need to know how price delivered today and what price is going to do next by using what price did today. Now if we look at this candle, this 1 2 3 candles, we see that we have a swing high already here, and we haven't formed a swing low. This is swing high, higher, higher low. Now we want to see our lower low, right? We already have we have higher high or higher low, and we have a lower low. Now we have a higher low and we need to see our lower low, right? So we haven't formed that lower low yet. So on that case, we are looking for price to continue going lower, and after we've taken the sell side, then we should maybe have a higher low below here, retrace and use this as an order block. Well, I'm just saying if that time gets into place, but for now we are going to look at this specific area. Now, since the dollar has already delivered today like this on Monday, then probably we might have Monday being the low of the week, right? And if Monday is going to be the low of this week, then there's higher probability that Thursday and Friday is going to be a reversal day. And don't forget, our almighty FOMC meeting is this week. All right, so well, before then, let's keep looking. If we deliver all the way to the sell side liquidity before FOMC, then we should look for FOMC to deliver price back into this range. But till then, let's talk about tomorrow. So I'm anticipating for tomorrow price to form uh, an efficient price delivery. When I said efficient price delivery, that means I want the candle wick for tomorrow to at least touch this previous Friday, which is this particular candle, low, and to tomorrow candle high, to interact or interlock between each other before we continue to go lower. Meaning I am not in support of us seeing a fair value gap on tomorrow price. So that is just what I'm trying to explain there. And yeah, I'm still anticipating for lower prices. If we go on the 4 hourly time frame, we've seen that it's just a tick below. Price is just a tick above this previous week low on DXY. And if we look here, we have our fair value gap, which is the 4 hourly fair value gap. And let me add that to the chart. So if we add this to the chart, we can see that we also have a 4 hour order block, H4, which is the H4 fair value gap, or CB. Anyway, just fair value gap, sorry, H4 fair value gap. So yeah, we have our H4 fair value gap, which we anticipating for price to retrace into this area. And also, if we look very closely, we have a very good 4 hourly bearish order block, right? We have our 4 hourly bearish OB, which I'm also in support for price to retrace into. So I am looking for this 4 hourly bearish order block to support our bearish move, especially, and also this H4 fair value gap to be completely filled, or halfly or partially filled, but not you. I'm not anticipating for price to interact with it as an what in um, as institutional order flow entry drill, which is IOF, the institutional order flow entry drill. So that's not what I'm looking out for here. I want it price to retest into it, maybe even relaxed before going lower tomorrow. And if price can interact with this order block, it will be very significant, and the price move will be very fast if price reacts to that area. So if we go on a lower time frame, our last time frame, on the hourly time frame, we see now on the hourly time frame, since we know that on the daily time frame price is actually at a premium price, then we need to use lower time frame range to determine our move going in next. So on the daily time frame, the order block still very, you can see it very good. And also, if we look at where the order block is in the premium price, so we want to sell at premium and buy at a discount. So we anticipating now that price is going to go all the way to the 50% or above the 50% region, and the 4 hourly fair value gap also is at the 62 sorry at the 62% to 70% region. which makes it a very good confluence for a good trade setup. So haven't us knowing all this, then let's go to DX. Sorry, let's go to the Euro US dollar. So this is the Euro US dollar. The Euro US dollar already started, which is the for tomorrow candle already started delivering since my chart is set to New York local time. That's why you're seeing it like this. So, and that is how your own chart should be set to. I'm using UTC -4, which is I'm using New York local time as my as the time for my chart. So now what I'm looking out for on euro is simply opposite of DXY. Since DXY is going to be bearish, we should look for bullish, or we should anticipate for bullish move. And we also see that this swing high and this swing low price react to the 62% region and also use this order block, then price react away from that area. Now we are trading close to the premium or in the premium of the daily range, and since we already know that our buy side or buy side liquidity, which is our draw on liquidity, has not been tapped, we should not be scared that we are in a premium, but also we should be very cautious while trading bullish buyers on a premium. That is why we need to go on a lower time frame to seek for the ranges on a lower time frame, so that we can be on a safer side by using lower time frame discount range price. So we've seen price delivered all the way above today close, and we close above today candle. And whenever we have a close above, which is a candle that closed above the previous candle, that is still in that is uh, indicating a higher time frame delivery. Sorry, yeah, that is indicating a continuation in price. Now since we are anticipating for a continuation in price, then I'm also interested to see euro delivered and not form a fair value gap, that is delivered into or below the previous Friday high, which is the high, which is around 1.1747. So this euro should get below 1.147 before going higher for tomorrow. And also, since we don't want to see a fair value gap, then we can go to the lower time frame to check for any PDRA that is below that high and in support of a bullish continuation in price. Now, if you follow me on Twitter, I did share this on Twitter today, telling you guys that you should watch this area. But anyway, now on a 4-hourly contract, the euro has a bullish fair value gap, just like the DXY has a bearish fair value gap. And on euro, the order block is not really, which is on the 4-hour, the order block on euro is not really valid or not showing completely, because the for this particular candle is inside this particular candle is the 4-hourly bullish order block. So we going to go on a lower time frame to find more order block that is suitable. But since we have this key level already, this particular H4 candle key levels, so I'm anticipating looking for price to react to this area. And we can see that during London, which is the 1 o'clock a.m. 4-hourly candle, sweep this particular swing low, right? Sweep this swing low and deliver into the lower time frame key level before going higher, which is something I've said on our weekly video if you did watch that video. So we've seen that price has rallied and we are very close to our buy side and previous week high. All right, so we should pay more attention to this area in price. So when we go on a hourly time frame, so this is the key level the price reacted from, which I marked out yesterday that price might react out of this 4-hourly invite. Sorry, an hourly inversion fair value gap, and price is going to use it as a support. We see that during the daily profile for today, right, is during the Asian, price was ranging to not completely in one place. Then London price sweep Asian low, and we started to give higher. I did take this trade today, which is very sweet, and I share it also on our channel, but not the trade, but I share my before and after on our Telegram channel. Now on hourly time frame, we can see this particular down close candle. This heavy down close candle is the most candle that we can anticipate for price to react into, since and as an order block if price deliver below this 4 hourly fair value gap. So as long as price is still between this 4 hour fair value gap and this an hourly OB, then we are good to go. And on hourly time frame, we can see a smaller fair value gap. Since the smaller fair value gap is between the 4 hour fair value gap, there's no need to add that one on our chart again. So that is basically what I'm looking out for on EU. And one of the most interesting thing about EU delivery for today is that the price delivery was so smooth and good, right? Though despite that, I learned something today, that when London, which is London session, delivered very large delivery, meaning, we see that London deliver from here all the way to this high before New York session. That is why most of the New York trade was in a ranging trade, but I was still able to take a trade, a smaller time frame short to this smaller fair value gap, which is my TP. But what does that have to tell you? That when we have a very large London session, New York session is likely to range or be on a ranging market ahead. And now that New York has range, what is that going to tell you on about Asian? That means Asian might be the 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 time frame or the session that deliver price all the way back to these our key levels, and London will take Asian low and start going higher, just like New York normally do take London low to go higher. Then London Asian is going to come lower, take London. Sorry, London is going to, if Asian come lower to our key level, London will deliver, sweep the key level, sweep the Asian low, and price will start to go higher. Then New York will continue if we have not taken the previous week high, or if we have not taken our buy side liquidity. So that is it for the euro. Then we go to our GBP, which is the cable or pound. This asset have different name, but now on GBP we have seen that price has already taken our previous week high. But what do we still have as our major area of liquidity? We still have our monthly range candle range high, which has not been traded to, and we are still anticipating for higher prices, especially since dollar and euro is still going the way it's supposed to go. Then there is higher probability or higher chances that GBP is going to follow suit, but GBP might have a slower delivery, but it's still going to follow suit. And what should we look out for? We have a daily fair value gap here, which price might react to and deliver and start coming lower. That means we are expecting price to use this to as a resistance, then break it and use it as support that will take us back to this monthly candle range high. So that is for a long time perspective. But what about tomorrow? If tomorrow GBP might likely have a fair value gap if we did not interlock with the Friday candle high, then GBP might likely have um a fair value gap tomorrow. But anyway, we are still in support of previous day high as our draw on liquidity for tomorrow on GBP. Then we have we'll go on the lower time frame to see if we have any um PDRA, all right, any key level that supports our bullish move that we can anticipate for GBP to come all the way back into. Now we see that yes, we have that here, and this particular down close candles can also form as our order block, and the order block is likely to be, not likely, this candle high is our order block, which is a bullish order block on a 4-hour time frame. On a 4-hour time frame, then we also, inside that, we also have our 4-hourly fair value gap, so which is the 4-hour fair value gap. So we have a 4-hourly fair value gap here, and also we have, inside our 4-hourly fair value gap, we have a bullish order block. So I'm anticipating for the GBP to trade all the way back to this 4-hourly fair value gap and use it to continue to go higher. What is our highest draw on liquidity tomorrow on GBP? Our highest draw on liquidity tomorrow is our previous day high, and anything above that high. And on GBP, if we take our part 2 to check the range, we can see that our 50% is still within, which is our discount price is still on that PDRA that we see, or that key level that we see. So which is which makes it very good to expect price to reach all the way down to that area in price. So going on lower, we see that this is the best order block on an hourly time frame. This is the best order block, and if price react above this area, then we can have, if price retrace back into this area, then we can have a bullish delivery from this area. Then this, we have something here which is very good, an hourly order block, because it creates a fair value gap and also sweep liquidity on the previous candles. So since we have something like this here, then price, because DXY GBP use more, GBP use order block very well, so it respect order block very well, then we might likely see this order block be effective for tomorrow delivery. So as you know how I used to do GBP, I used to mark it out like this. So let's put our position 2, and tomorrow we see if we actually price actually deliver all the way down to that area as we called out, or we get taken out. So yeah, and our previous day high would be our draw on liquidity, which is 50 pips plus. So we can look out for something like this exactly for tomorrow if price reach to this level, but I'm not sure price is going to get to this level. But anyway, that is just it for GBP. Then if we go on Bitcoin, we see that right, I like how Bitcoin delivered today, right? I like it. I've been telling you guys that I'm in support of BTC reaching all the way to this weekly fair value gap and trade below. Now on a weekly time frame, now one of the things that got me thinking that price might not go below or might not go lower is the fact that on a weekly time frame, the price, although price respect, which is the price close, the close of this previous week candle was in the in the weekly fair value gap, consequent encroachment, which is the middle point, the 50% of the fair value gap, we indeed close inside, which is also giving us a hint that price might go lower. But if you look at it very well, we might continue to have higher prices only if the war continue, or this news of wars or events, all those things push price of Bitcoin higher. And despite with gold as well, gold is likely to continue going higher, especially with what the China is doing with gold, using gold very well, and all of that. So I'm not really I used to watch those news at my leisure time, so those things are very important for you as a trader to check out. So on a daily time frame, we've seen that today, which is being Monday, price deliver and sweep. This was a liquidity sweep, right? So what do I mean by a liquidity sweep? It's a liquidity sweep because we have a what is it called? We have a candle wick going above this high, which is the previous week high, then deliver lower faster, meaning it's a candle, it's a liquidity sweep, and price is likely to start going lower. But now this is what is going to confirm our bearish, or confirm the bearish bias, this fair value gap, right? Now if price, I since I trade Bitcoin on a, I don't I don't I swing trade Bitcoin. I don't what is it called? I don't day trade Bitcoin. Now, if what I'm looking out for, if Bitcoin continues to come lower and below this fair value gap, this is supposed to be a bullish fair value gap. But if we trade below it and use it as an inversion fair value gap, then honestly, I will more likely to take a trade on that fair value gap, on that, and take a bearish trade on this inversion fair value gap, putting my stop loss above this particular candle week consequent encroachment, which is the 50% of this week, the candle week consequent encroachment. Why not here? Because this candle week, if we are actually bearish, price should not go above this candle week. If you like, put your TP or your stop loss above here because you are afraid of price coming all the way there to take you. The one of the things you should know is that if you are trading, you should know some certain things that price is not likely to do. Whatever makes price to go above the candle week consequent encroachment of today candle, that means that thing is going to make price to come all the way up. So that means you are just giving market extra money instead of having information that is beneficial for you to adjust your stop loss and know that whatever make this thing to happen, then whether I put my stop loss above here, I am still not safe. That is what I'm trying to say. Whether you think you put your stop loss here, then you are very safe, no. Or if you put it here, whatever things that happen in the market that make markets to come above today candle consequent encroachment, that means that thing is telling us that price is bullish. So if we, what I'm looking out for on a daily time frame is that price should deliver below this uh fair value gap, which I'm anticipating to become an inversion fair value gap, then a retracement into that inversion fair value gap. I will gladly take a sell, and this will be my target, which is our, let me just make it as a buy side, sell side liquidity, which is which will be our sell side liquidity, will be my target. So from here all the way down here, that is a good amount of pips and a good amount of profit to go home with. Let me take this out, then I'm going to make this current interval and below, then I am going to make this weekly fair value gap to be only on the weekly time frame, right? Only current interval only, so that the daily fair inversion fair value gap, we can have a good view of it, right? So now this is very interesting. Now this is why I said, even if you decide to put your stop loss here, then whatever makes price to get above the consequent or the consequent encroachment of the candle week will also make you lose your trade. Now on a 4 hour, we have this fair value gap, and what do you see? A change in the state of the delivery, which is CSD, or what you guys call a change of character, where whether change of character or CSD, or it's still all is still the same thing. People are just giving them name. giving it name. So we see that we have a change of character here, or change in the state of delivery. I love the name change in the state of delivery. It resonates with me more. Now there is a change in the state of delivery lower, and price created a fair value gap. Now we have reacted on that fair value gap. Now you can use this fair value gap to trade lower, but now you should not also forget our higher time frame key level, which might affect or influence price going higher. If I'm actually, if I do the trade Bitcoin, I might actually take this trade and target this particular low, right? Or this low. There's a hard possibility that we are going to go. But since we am swing trading it, I'm waiting for higher time frame perspective. I'm not just going to start, giving the market my money anyhow. So I'm waiting for a higher time frame perspective, and which I am going to use as a reference point for my trade setup. So this is how I pick my trade, guys, and as you know, this is how my trade tends to give me what I need. And let's make this previous week high. So yeah, so this is a previous week high sweep, and price is going lower. We've seen a change in the state of delivery already. Now look at it. If no matter the time frame, you go into, you will still see that price did not close above. Even on the hourly time frame, we did not have a close above here, which is a very good indication of what a liquidity sweep. And also look how price delivers sharply. This impulsive move is indicating that price is seeking for sell side. But is the sell side a higher time frame sell side liquidity? We don't know yet. That is why we need to wait for 4 hour or daily higher time frame confirmation. Now we have a lower time frame confirmation, but the higher time frame confirmation is not completely clear or clean. That is why I was saying the statement I said on the daily time frame. So this is basically the key level you need to watch out for. So in conclusion, uh, the Bitcoin market is still indecisive to me, but what I favor most is bearish move. Since I am a swing trader of Bitcoin, I will definitely wait till Bitcoin give me my confirmation, just like I've stated. But since we they trade euro, let me just go back to the euro and explain something for you guys again. So on euro, yeah, we are going to see a consolidation around this area. Then price is going to come all the way to this 4 hourly fair value gap, then take it before we see a higher prices. So until then, thank you for watching, and see you tomorrow. Please and please do me a favor to subscribe, comment, and like this video. For this is what I love doing the most, and I'm going to continue giving you guys a light update like this. And I hope in the meantime we can become one of the best traders too, not just best to the world, but best to ourselves, our family, and change the story of our families too from trading. If you believe, then stick around. Let's ride this journey together into a change to our livelihood and our ancestry livelihood. All stay consistent, pray, and remain blessed. See you tomorrow, guys.